So this is the Gap Incorporation consolidated balance sheet. Why we written partial here? Because there is no liabilities and owners equity here. Only the asset side is here. So that's why we call this partial. So because this is a balance sheet, so balance sheet dated from 28 January 2012 and January 29 2011. It shows the financial position of a company for 1 year on a specified date, right? So we have, why we call this consolidated, because company has other businesses as well, so you just add all the stuff. For example, Gap has, women clothing, children clothing, and adults clothing. You just add it into one account, so we call this consolidated balance sheet. Okay, here we have asset side, so it's in millions, so all the words they are in million, right? So current assets include cash and cash equivalents, short-term investment, merchandise inventory, or we can also just write down inventory, other assets, and then total current assets, right here. And then long-term assets, property, equipment, other long-term assets, these are different. So other include the stocks, investments, prepaid expenses, it's like that. So we successfully completed the asset side of the balance sheet, and now talk about the liability side. Similarly, we talk likewise we talk about the assets categories. So liabilities also divided into two categories. Number one, we call this current liabilities, and number second is long-term liabilities. So just first we talk about current liabilities. So current liabilities are the loans or debts payable in next year or within the business operating cycle if longer than 1 year. So this philosophy of, I already told you, because every business has its own operating cycle. Normally the cycle is for 1 year. So current liabilities, same if the life is less than 1 year. So the amount you have to pay if the time is less than 1 year, we categorize this as current liabilities, and it includes accounts payable, income tax payable, accrued expenses, current maturities of long-term debt. We talk about one by one. So what do we mean by amounts payable? So amounts payable, amount owed to vendors and suppliers for purchasing of inventory, because you are business and you purchase raw material and you convert it to finished goods and send it. So when you convert the finished goods, that becomes your inventory. When you purchase the raw material from the supplier and you have to pay and you didn't pay yet, so that account is called accounts payable, that you have to pay the money. So this is not your claim, this is outsider's claim. Suppliers can say that, okay, this is my amount of money that you have to pay. So that is the business, that is the outside's claim on the business, right? Accounts payable, which is a category of liabilities under current liabilities. The next one is income tax payable. So you owe the tax and you didn't pay the taxes. This is called income tax payable. When you pay the taxes, that is not your liability because you already paid. This is payable, right? Okay. Next one is accrued expenses, which means expenses occurred but you didn't pay yet. For example, salaries, bills, utility bills, or other expenses, right? Your employees worked for you for a whole month, 30 days, and you didn't pay your salary because the accounting cycle ends, and you have to pay them like in the next 2 or 3 days. But financial position show at the specific date. At that date you still owe salaries. We call that accrued expenses, right? The next one, the last one, is current maturities of long-term debt. So you purchased a loan, for example, $1 million for 10 years. You said that every year you will have to pay 110,000. So this year, would you pay $1 million? Answer is no. We will pay some parts of its $1 million, which include 100,000 is your principal account and 10,000 is the interest. Right? That's why it's one here. So this part, current portion of long-term debt, this part is called current liability. Right? Portion of long-term liabilities that the companies will have to pay within the next year. Now moving towards our second category of liabilities, which is long-term liabilities. So long-term liabilities are payable after 1 year, or if life is for more than 1 year, or if the operating cycle longer than 1 year, right? Which includes long-term notes payable. Are you right? So there are business, for example ABC company, and they have a pad, official stamp here, and they said that we have to pay this $1 million to Z company, right? For after 5 years. So these are the notes that's issued by the company and has like a legal claim on that. So you can just and the Z company paid you $1 million, and you issued a note which is challengeable by the courts, and you have to pay the $1 million after 5 years. After 5 years, for more than 1 year, this is long-term notes payable. Or if you ask a loan, or we can call it long-term loans. You ask $1 million from bank give you $1 million, and you have to pay them after 5 years. 5 years means longer than 1 year, so it's long-term loan or long-term debt. Bonds payable, company needs money, company already acquired money from the banks and also from notes payable, and company needs more money, and banks are not ready to give you money, or other businesses are not ready to give you money. Then the option is, why don't you go to the public and ask loan, like you issue the shares, right? But this time you issue bonds, right? So you gather money from the, it's exactly like same, but in that one interest is also mentioned, and you have to pay interest like after every year or after every 6 months. So this is called bonds payable since life is for more than 1 year. So we have all complete chapters on this one. We will discuss in details about bonds payable, so just don't worry about right now. It's nitty gritties. Okay, now this is the liability section of the gap incorporation. Why we are using partial? Because it only shows the liabilities, not owners equity, not the assets. The asset side we already talk about that. So here current liabilities include current maturities of long-term debt, accounts payable, accrued expenses, income tax payable. This is the total current liabilities. And on long-term debts, other long-term liabilities, and this is the total liabilities, right? Sorry, total long-term liabilities, and total liabilities include both 1 and 2, which is current liabilities and long-term liabilities, right? Here.